Thank you for your patience. So let's keep the energy flowing with our next panel discussion and these amazing people to my left. Innovations in climate finance, driving investments in sustainable solutions. Please welcome to the stage Matthias Dill, CEO and Managing Partner, Europe Energy Impact Partners. Jeremy Brown, Investment Principal at Anthemis. Welcome. Elisa Steccaglia, I have your name not too badly, I hope. Principal at XAnge. Bianca Dragomir, Director at Cleantech for Iberia. Please welcome. And our moderator for this session, Margarita Skarkou, Principal at 2150. The stage is all yours. Thank you very much.
Great. Well, good morning, everyone. Thanks for being here, especially after what I hear with some quite good parties last night. Really excited to have this great panel with us today and looking forward to a good discussion on the topic. So briefly introduce myself and then I'll hand over to the panelists to do the same. So I'm an investment principal at a climate tech firm called 2150. We're based in London and Copenhagen, investing globally at Series A and B primarily. And I'm also a non-exec advisor for UKRI and Innovate UK, which are the UK government's main innovation funding arms, so mainly doing grants and loans for tech deployment and everything from sort of PhDs up to R&D and deployment of new tech. And yeah, with that, I'll hand over to Matthias to introduce himself and the rest of the panelists.
Great, thanks. It's great to be here. I'm Matthias. I'm one of the partners at Energy Impact Partners, and the name gives it away. We're an energy transition-focused global investment platform in the United States and in Europe, really trying to back the best entrepreneurs, betting on those people who build technologies for a cleaner energy transition.
Hi, I'm happy to be here. I'm Jeremy Brown. I'm an investment principal based in London at a fund called Anthemis. We're a fintech fund, and we focus on pre-seed through Series D investments across North America and Europe. We have a particular interest in climate fintech and strong believers that financial services will be one of the main drivers in getting to a net zero future. Happy to be here.
Hi everybody, nice to meet you. I'm investment principal at XAnge. We are an early stage VC fund based in Paris and Berlin. We invest across all the industry with the same fund. We invested today in 80 companies, 5 became unicorns along the way, and energy is one of our main focus today.
Good morning, everyone. My name is Bianca Dragomir. I'm director at Cleantech for Iberia, which is an initiative that gathers more than 20 investors and leading innovators in the Iberian Peninsula. And our mission is to turn Spain and Portugal into the next European industrial cleantech leader. And I've been working over the last 14 years in clean technologies at the interface of investment, innovation, government, and academia, shaping clean tech transition into action.
Great, thanks everyone. So maybe Elisa, to start with you, as a European firm that invests across different industries but has a strong interest in climate tech, where do you see the most exciting opportunities? And I think in particular, how do you think about this difference between sort of software, hardware? How do you define what climate tech is?
Very good question, especially in energy, where we see a lot of hardware and industrial play. We would say that our way of thinking is, first of all, investment thesis driven. So we basically track macro trends. We invest in massive markets. And this is the case in the energy, for example. If we take the example of the European Union that wants to become carbon neutral by 2050, we would say that the macro trend here is to find alternative way to produce energy, and we may think about nuclear fusion, hydrogen, and so on, but also some ways to mitigate the current situation, and so to, for example, suck CO2 out from the air. That's why we invested in Sirona, which is a direct air capturing technology, and also in Pina Earth, for example, which improves the health of forests. So those for us are macro trends, but there are others for sure. For example, we talked a lot yesterday about grid stability, flexibility, because we know that when renewable energy penetration reached 60% of the energy mix, grid storage became essential. So that's a bit our way of thinking. Then, of course, there is the team. We seek complementary talent coming together to work. We want to see manufacturing background and expertise go into the manufacturing parts, into the industrial parts of the business. We want to see the capability of the management to seek a relationship with the clients at really early stage, and that's why a lot of seed rounds that we have been seeing lately have been possible also thanks to this. I have my map. Okay, to this relationship, early relationship with the clients. And then respect on about the hardware-software mix, it really depends case by case. As a generalist fund, we tend to invest more in software because it's a less risky bet. But there are many exceptions. For example, lately we invested in a qubit pharma, which is what I would define like a hardware-enabling software play. It's like quantum computing to develop drugs, and then they are developing their own hardware, which is the quantum computer. And for example, we invested in Ledger, which is one of our unicorn, a 100% hardware company. So it's really depend. And what has changed a bit in the climate space, it's also that there is a lot of support of public administration, governments, European Union, to fund also with public fund this company basically, and that gives a lot of leverage on private capital, on equity that we have been rarely seen in other verticals, for example.
Yeah, no, 100%. I agree with that last statement. Matthias, I guess on the other end of the spectrum, EIP is probably one of the most seasoned investors in the, when you started perhaps clean tech, now climate tech. What have you seen has changed in the years that EIP's been active? And do you see any sort of differences geographically or across different regions as the market, I guess, has continued to mature?
It's kind of an unfair question, I guess, because it shows how old I am. But you're right, I've been around the block for a while, and I think there were two waves at least in back then clean tech, now maybe climate tech or energy tech, right? And the first one was around like 2007, 8, 9. And people got very excited, right? And then some things worked, like residential solar worked, still works today. Others didn't, like whatever, ocean wave-based power generation. And then people got overly depressed again, right? And so when there was quite lonely for a while. And when I built my first energy-focused fund, people literally questioned my sanity, and that was 2014, right? Which is usually a good time to invest, by the way. But then everybody got excited again in the 2000s, right? And probably the peak of that excitement or accelerated excitement was like when you saw companies going public through SPACs at billion-dollar valuations with no product whatsoever, but just on the promise of making the planet better, right? That has come down again, and that's where we are today. And you could say, well, that's how venture capitalists are. They get overly excited, overly depressed. That's just how the world goes in venture capital. And there's some truth to that, I probably have to admit. But I think there's a fundamental underlying trend that's important to understand, because it's more than just hype cycles coming and going. Because if you look at energy today, the heavy lifting has been solved. It's not a question anymore. Like renewable energy generation is most often the cheapest, the best, the cleanest source of energy, right? And you can see that by looking at somewhat pragmatic, if not cynical players, maybe like China. They invest heavily in renewable energy generation. So you can literally say that part of the problem is solved, which is great for the planet. But it has started to create a new set of problems, a set of problems which is more complex and tends to lend itself better to like software solutions, right? You have now lots of renewable generation, which is fluctuating. So you start to need more storage, right? To kind of store power when the wind is blowing and have it when it's not, right? So I think there's much more more granular matching to be done, more software type of problems. And that's the way we're now. And I think that's why it's an exciting time to be doing what we're doing.
And I guess the IP is also kind of known to have a lot of energy companies as LPs and industrial companies. Have you seen anything change in terms of how they see the opportunity for a climate VC like yours and the types of things that they're also interested in?
Yes, I think the good thing is today that I would call them the incumbent industrial players, big energy companies, are starting to embrace innovation more than they used to. And that's partially because why they join our platform. We have roughly 60 large industrial players being part of Energy Impact Partners ecosystem. And we can really see them embracing innovation much more actively and trying to partner with those innovators, with the best-in-class startups. And I think that's, again, specific to energy transition because unlike in other fields that had been disrupted, like e-commerce, like the energy tech is very different in the sense that you have to work with the existing infrastructure players, right? You cannot ship electrons by mail or by email, right? So you have to work with the power system operators. So any startup that wants to disrupt the energy tech fundamentally needs to at least understand and often collaborate with the existing players, right? So I think that's an important element why I think every founder is, I think, smart in trying to find ways to leverage, to collaborate with the existing infrastructure, investment capacity of the incumbent industry.
Yeah, agreed. Bianca, switching gears also a little bit from the kind of VC landscape, you work for what I like to think of as kind of think and do tank, and we're also as a fund quite involved in the Cleantech for Europe initiative. Where do you see the opportunity, particularly for public finance, to play a role? And are there any examples that you can share with the audience where things are working really well in a potentially Spanish and European context?
Mm-hmm.
Thank you very much for this question. Well, let me just say first that, well, indeed, I work in Spain and in the Iberian Peninsula, covering Spain and Portugal with this initiative that is basically aiming to be a bridge between the cleantech community, meaning innovators and leading investors in cleantech, and the government, because we certainly need to press some fast forward buttons there in order to speed up the cleantech journey. And on the other hand, another pillar is working on creating a breakthrough ecosystem around cleantech, and that basically means more co-investment opportunities and expanding deal flow. So within this framework, basically one of the pillars is working directly with the government in addressing those pain points in what we call, the funding, the fit-for-purpose investment and funding for climate innovations. And of course, we all know that Iberia is having a momentum now in cleantech. It's already a clean energy superpower, and 20% of the green hydrogen projects worldwide actually are happening in Spain as we speak, and also the investment in cleantech innovations over the last 5 years has increased 6 times. So that's quite a momentum here, and we need even more speed and scale in order to really turn this into a cleantech leadership. Now, if we look from another angle, we see also that there's really a severe gap in terms of Series B. And if you look at cleantech startups, they receive, the Iberian ones, so the ones in Spain and Portugal, they receive 70% less investment than the ones in Germany and France. So certainly we need, more speed here. Now, this opens up a huge space of opportunity to work with the public funding that has a huge role in de-risking the private investments and in raising and the private sector confidence in cleantech investments. And here we are working very much together with our coalition members in how to make these projects bankable, taking into account that there are about 500 startups in cleantech at the moment only in Spain that need this funding and that are kind of, in a no man's land, because they lack this, they cannot scale enough because they don't have the public funding to de-risk. And then the investors that, by the way, the investors in a coalition, they have a combined fund size of more than €1 billion that today is available for net zero solution, and we need to deploy that investment fast. Well, you see, the kind of a complex landscape. And here, I think that, the silver bullet, if there is a silver bullet, would be, really enacting change around what is blended finance. Those innovative mechanisms that we can create together, bringing public and private sector, bringing grants and commercial investments, whether it's equity or, venture debt. We need to bring all these together and really create a movement around it. And that's also one of our priorities at the moment.
And are there any? Yes.
So can I comment on that?
Yeah,
because I think I really want to second that because it's super important and often overlooked. Like that the role of the public investors, like even behind many investment platforms like ours, there is often kind of public state-backed actors, and they play a very meaningful role because they often have a longer perspective and they're more patient. And I think that's very important to get the industry going. And I think I really want to call out, in our case, there are some countries that are really on the forefront, such as Norway or Ireland, who are really pushing very hard. And I think that makes ecosystems emerge, right? And I think the role of the public players is very important. And sometimes it's overlooked, but it's very important.
And also, if I can add something, I think that Europe is one of the rare cases that is in this specific market a bit ahead of US. Yeah. The total funds from European Union amounts to 1 trillion from 2020 to 2030. There is the European Innovation Fund, which is worth 40 billion just to give grants to net zero projects. So it's amazing, and that's how basically those companies can leverage a lot of private capital. For example, last year, Verkor, which is one of the biggest European battery manufacturer, raised 2 billion. And only 1/3 of these 2 billions were equity. So the rest was grants, debts, and that is a fantastic opportunity, I think.
Yeah, I think it's no, but I mean, I think the point on the Europe being ahead is interesting because generally in the climate tech sphere, I think recently that's not been the sense at all. And I think just last week the US announced who is receiving the 20 billion of additional grant funding to be distributed. Yeah. In the shape of the Greenhouse Gas Reduction Fund. So it's quite interesting to hear that perspective. And I guess that, access to these funds is probably one of the biggest challenges for startups. Like, there's a lot of capital, to your point, Bianca, but how do you actually access it? And one example that I'll share just briefly on this from the UK and Innovate UK is they've rolled out over the last few years a program called Innovation Partnerships, where they basically match equity with grant funding. That doesn't solve the Series B gap because we're still talking about relatively small amounts. But we've also been building out something called the Innovation Loan, which is sort of loans that are available at a much higher risk appetite, lower price point. And now I'm in the process of working with Innovate UK to think about, okay, how do you scale that so that it works with sort of first of a kind in a blended finance model. So yeah, I think there are definitely initiatives that are out there. It's perhaps still that kind of access, which I guess is what you're also working on.
Right. And maybe just to give an example, because you mentioned Europe. No, if you look at European level, we have a great example that from actually that was announced at the last COP in Dubai end of last year. That came, from Breakthrough Energy Catalyst with European Investment Bank and European Commission coming together, putting together this blended finance mechanism to actually accelerate, to deploy first-of-a-kind projects with Energy Dome in Italy and with Ørsted in the Nordics, so sustainable fuels and long-duration energy storage. This is what we need, But we need this not to be an exception or a wow effect around it, but we need this to become business as usual and to expand across the whole European Union and hopefully also in Iberia, which is what we are working in this.
Yeah, but I think we need to be also aware, like the US is very strong these days, and the Inflation Reduction Act has a big pull effect, right? Many of my companies actually moved to the US. One just got a 40 million grant, like for a very early stage company, and I think that makes a difference. People go where the money is, where it's easy to get.
Yeah, but at the same time, indeed, if you look at Europe, we have a 50 billion euro investment gap for Cleantech from now to 2030. But then we have also the mechanism to actually cover this gap if we look at, if we mobilize, institutional investment.
Yeah.
If we actually are able to mobilize, those public guarantees to de-risk investment.
Yeah.
And if we look at the carbon pricing revenues, you know that only in 2022, we calculated that there were 40 billion euros of revenues. Why don't we use this instead of building more infrastructure, more roads, for clean tech deployment? That's what we need to do.
Yeah, I think it's the usual kind of speed in the US and ease of access versus Europe, kind of other too many hoops to jump through. Jeremy, I'm really keen to come to you as I guess one of the kind of experts on the panel. You work for one of the most renowned fintech investors, and as you said, you had very keen interest into climate fintech. So what are the kind of key trends that you're seeing, perhaps less from a blended financing mechanism, but more in terms of where you see the opportunity in the climate and fintech space?
So I would say one thing that we're really interested in and keen on and becoming more so is everything happening in the carbon markets. In compliance, but more so on the voluntary carbon offset market. And that's because, and going back to the discussion earlier, between US and Europe, I think as an investor, we like some degree of certainty. That's not a given in venture at all. But as we see the VCM market continue to grow, there's much more emphasis now being placed on integrity of that market, as well as quality of credits. And that's going to enable, in many ways, for that market to grow and scale. It's very, very ambitious, kind of what people are saying. Some big banks are saying the VCM is going to be 50 billion in 2030. Some are even saying 150 billion. I'm honestly skeptical because it's around 2 or 3 billion right now. And so what are the drivers that are going to enable that to get there? We still don't have the digital technical rails that are going to enable it to scale. We still don't have robust marketplaces at growth that are going to enable these credits to be transacted in a very efficient way. There's a lot of early stage startups that are trying to make this happen, but all of this needs to come together in a really beautiful way. And what you're seeing right now at the government level is a lot of cracking down on these false green claims that a lot of corporates are claiming, and that's good. And so what you're seeing with that is a lot of the registries like Gold Standard, Vera, they're taking a little bit more control over how we actually validate, especially in the nature-based context, kind of these claims on credits. And so rather than putting estimation of credits in the hands of developers or technical consultants, trying to build from a very sort of registry-centric methodology perspective, one source of truth, where the registries in the future will be kind of this gold standard in terms of saying, this project in Brazil is going to be able to issue this number of high-quality credits that then can be, bought on a marketplace by selected buyers. So all of this coming together between government, registries, exchanges, early-stage startups, more growth-stage startups in the future, I think are really going to enable the VCM to scale, and that's just going to open up a lot of opportunities for investors and founders alike.
Yeah. And I think credits can be done in the right way and with the right kind of transparency. I think they are enablers also of growth for, more traditional somehow business models. So an example from our portfolio, we have a company called Carbon Cure. They do green cement. They basically inject CO2 into the sort of concrete mix during the curing process. That reduces the requirement for OPC, which is where a lot of the kind of embedded CO2 comes from in the concrete process, and it also improves the curing process. The core business model is obviously doing what they're doing, and they work with a lot of concrete and cement manufacturers around the world, but they also are able to generate credits off the back of what they're doing, and from a kind of margin perspective as an investor, that's very attractive because suddenly they're not just a kind of hardware-based business, but they have this very high margin and high integrity credit that they can prove. So I think this is also what we see perhaps from more of a kind of hardware perspective and where we see the kind of credits come in. The other thing I want
I think it's very important to say how optimistic we can be on those data points, right? Because I don't know those guys' numbers, but I expect they would probably good carbon credit from that source would be 4 times as much, like 400,
Yeah.
300, 500 euros, as opposed to the compliance market, right? So I think you can see from that data point that people care and are willing to pay up for honestly good decarbonization solutions as opposed to what you call greenwashing. So I think it's positive, and that hasn't been the case like a few years ago.
Yeah.
I think, especially, I mean, yes and no, in my opinion, because there might be a price premium, but then what you find is, after the fact, they pay too much for it. A lot of people with some of these credits that have been transacted recently realize they're kind of junk, or they paid a little bit too much just because of the bullishness around it.
Yeah, fair enough.
Yeah, I think one other thing just on this topic, because I read about it yesterday, and I actually might be completely misquoting it, but I think the Science-Based Targets Initiative have just come out and said that actually companies can use offsets to offset their Scope 3 emissions, which is huge, because for a lot of companies, Scope 3 emissions is potentially kind of 80-90% of the footprint. And I think they're trying to put kind of those guardrails that you were referring around it, because it is perhaps a little bit also controversial in some communities. But I think that's going to also kind of create a massive boost for this whole space. Great. So we only have, a few seconds left. I have a clock kind of ticking here. But maybe just to kind of end the panel, I'd love to get a 10-second prediction from each of you of, what are we going to see in the next kind of 12 months in relation to the climate tech financing space? Maybe starting with you, Bianca.
Well, the optimistic version is that I like to see more blended finance across Europe and more success stories in this space. And particularly in Spain, I would like to see this purchase that we have here with a lot of money for decarbonization. There are large-scale strategic projects, like more than 3 billion euros, for example, to deploy decarbonization technologies, to see them in a more flexible financing mechanism. So hope this is feasible this year.
Great.
Thanks.
Elisa?
I think that this year will be a wonderful year to start a new company, because investment from VC are picking up again after a 2023 that was a bit contracted, a lot contracted actually. And we have been seeing that lately in the first 3 months of the year, a lot of more deal flow also in the energy space. So I'm pretty optimistic about the industry in general.
Jeremy?
I think we're starting to see in the insurance industry, insurers starting to really think about innovative insurance products beyond just risk modeling, enhancing their underwriting capabilities related to climate change. So we're going to see, I think, more insurers and adjacent companies talking about what's going to be that next wave of innovation in insurtech that's going to enable, for example, like issuance of credits to be well protected and give more certainty to the market, like with respect to buyers.
Insurance as enabler, I think that was the panel
Previous
before
panel,
us.
yeah.
Matthias?
Yeah, I guess more pragmatism, which will translate into more transaction as people agree more on pricing. And hopefully see first exits in the broader energy tech space.
Great. Well, with that, I'd love to thank our panel for a great discussion, and thanks all for joining us today.
Thank you.
And enjoy the rest of the day.
Thanks.